everyone, and you're very welcome to today's webinar. For those of you who have just joined, we have already completed a sound check. If you are having problems with your sound, just be aware that you can increase the volume on your computer. Okay, so first up today we have Paul Byrne, and Paul is the Managing Director here at BrightPay. He is also a chartered accountant, having previously spent over 20 years running his own practice. Today, Paul will discuss auto-enrolment and what you must know as we approach the next 12 months. Today, we are also delighted to welcome our guest speaker, Henry Tapper. Henry is founder of the Pensions PlayPen and director of First Actuarial. Last week, he was awarded a Lifetime Achievement Award by CIPP for its work on pensions and payroll. Today, Henry will present all you need to know about choosing a pension scheme. Today's webinar is CPD accredited. Just bear in mind, if you do want a CPD certificate for today, please make sure to fill in the survey at the end of today's webinar and we will send out the CPD certificate within the next few days. Today's webinar, we will also have a questions and answers session at the end of today's webinar. So on the right hand side on your control panel you'll have a questions bar, and you can type questions into this throughout the webinar, and we'll get through as many questions as possible at the end of today's webinar. This webinar is also recorded, and we will send the recording to all attendees afterwards along with a copy of the presentation slides. So I'm now going to pass you over to Paul to kickstart his part of today. Thank you.
Okay, thank you, Rachel. Hi, everyone, and thanks for joining us today. Okay, just a small bit about myself before we start off. Okay, just make sure I have the equipment working here. Okay, my background is as a practicing accountant, so I started my own practice back in the 80s, and I probably feel as old as Henry does with his Lifetime Achievement Award. Eventually, I grew that practice to a 3-partner practice with 10 staff. While in practice, I provided payroll bureau services for about 30 clients or so, so I have some idea of what it is like in the front line. In 1992, I got into payroll software development. A large part of the reasoning was to, basically make better software than what I was using at the time. Eventually, I escaped from practice and I began working in software development full-time. About 6 years ago, we introduced BrightPay and Bright Contracts in both the UK and Ireland. Last year, we released our most recent product, BrightPay Connect, which is an add-on to BrightPay Payroll. And this is an automatic cloud backup and self-service portal for bureaus, their clients, and their clients' employees. Today, over 100,000 employers across the UK and Ireland use our software. And this is a figure we hope to improve on every year. So here's the agenda for my slot today. And when talking, sometimes I refer to auto-enrolment or automatic enrolment simply as AE. Okay, auto-enrolment, what's the point? In recent years, people living in the UK are healthier and as a result living longer. Currently, the majority of people in the UK are not saving enough for their retirement. The pensions regulator and the government have thus brought in automatic enrolment to tackle this very important issue. As a result, all employees aged between 22 and state pension age and who earn more than £10,000 per annum must be enrolled into an automatic enrolment pension scheme by their employer, and the employer must contribute to that scheme. Employees who are not in this worker category have the option to join or opt into a workplace pension scheme instead. Auto-enrolment has well and truly evolved since the rollout began in 2012, with over 750,000 small and micro employers reaching their staging date this year. It is the biggest year ever for auto-enrolment. This is the final year of the staging date process, but it is the final year, but there are a number of new changes coming within the next 12 months that employers need to be aware of. Okay, just moving on here. Sorry, I went ahead of the slides there slightly, so I'll just leave those slides on the screen so you can just digest them somewhat. Okay, auto-enrolment and new employers. Since the rollout of auto-enrolment began in 2012, all employers have had a staging date which kickstarts their employers' responsibilities. Perhaps one of the biggest changes for the year ahead is how new employers will handle auto-enrolment. Although the rollout of staging dates does not end until February 2018, from October this year, all new employers will be affected by auto-enrolment. Worryingly, according to research conducted by the pensions regulator, almost half of accountants did not know that employers would have AE duties. If a client becomes a new employer after the 1st of October, they will not have a staging date. Instead, they will have an auto-enrolment duty start date. Your client should be ready to comply with their legal auto-enrolment duties as soon as the first employee begins employment. And I should say this excludes single director companies. Where your client is a new employer and about to employ someone for the first time, they will need to complete certain tasks in preparation for auto-enrolment. Once they have registered as an employer with HMRC, you or your client will need to inform the pensions regulator of the chosen point of contact for auto-enrolment. The new employer will also be required to choose a pension scheme that will be suitable for their business and employees. On the first pay date after the duty start date, similar to staging, all employees must be assessed to determine whether or not they need to be automatically enrolled into a pension scheme. Any eligible employees must be automatically enrolled into a qualifying auto-enrolment pension scheme where the employer must also make contributions to the pension pot. All employees must receive communications informing them of how auto-enrolment will affect them and what their rights are. So this is one of the things we need to do for the CPT accreditation, and just to make sure you're all paying attention, we have a quick poll. As of the 1st of October this year, when will new employers have auto-enrolment responsibilities? Is it A, the employer will receive a staging date from the pensions regulator, B, as soon as the first employee commences employment, or C, at the start of the next tax year? So just type in the A, B or C into the control panel there on your right hand side. Okay, I can see there that 97% guessed the answer correctly, and of course the answer is B, as soon as the first employee commences employment. So let's have a look now at how the minimum contribution rates for automatic enrolment are set to increase within the next 12 months. There are two stages to the increase in minimum contributions, which has been described as phasing. The first increase will take place in April 2018 and the second increase in April 2019. On the 6th of April 2018, the total minimum contribution will increase from 2% to 5%. Employers will need to contribute a minimum of 2%, with employees contributing the remaining 3%. Minimum contributions will undergo further increases in April 2019, with the total minimum contribution rate increasing to 8%. Representing a 3% employer and 5% employee contribution. It is the employer's responsibility to make sure that they are prepared for these new contribution levels. If the employer wishes, they can decide to pay the total minimum contribution rate, which is 5% from April 2018 and 8% from April 2019. In these cases, the employee does not have to pay any contributions unless the rules of the pension scheme say otherwise. And I gather that in a lot of cases this will be what will be chosen in the event of salary sacrifice, which will become a lot more popular as these rates increase. The employer and the employee can also choose to contribute a higher amount to the pension scheme if they wish. If an employer chooses to pay more than the employer minimum but less than the total minimum amount, then the employee must make up the difference. Your payroll software should easily and automatically calculate the phased increases for you. It's important that you check that your chosen pension scheme and payroll software can support the phased minimum rates. Pension providers should also be taking steps to ensure that they can help their customers comply with the increased rates. If you're looking after auto-enrollment for your clients, it would be your responsibility to make sure that the correct amount of pension contributions is being deducted. There is no legal requirement to send communications to employees informing them of the increases. However, simple and clear communication will make it easier for your client staff to understand the phased contribution rates, and maybe just to make sure that the first time they see the increases isn't on their payslip. New employers who reach their duty start date on or after the 6th of April 2018 will immediately be required to comply and implement the total minimum 5% contribution rate. Equally, employers who reach their duty start date on or after the 6th of April 2019 would need to comply with the total minimum 8% contribution rate. So just another comment on the increase in rates and new employers. It's important to realise that a new employer effectively has those duties straight away, and they're akin to their current duties in relation to PAYE and NIC. So it's basically the responsibilities for deducting and contributing to the pension contributions rank equally with PAYE and NIC. This year we'll see an increasing number of key pension providers developing an API option that will also allow payroll software to fully integrate with them. Certain payroll providers such as Nest have made real headway in terms of automation. Direct API integration allows payroll software and the pension scheme to communicate or talk directly to each other, which is a similar concept to RTI. API integration means that users no longer need to export and save the data files to their PC and then log into the pension provider web portal to upload the data. Instead, the data can be sent directly to the pension provider at the click of a button from within the payroll software. As I said, that's very similar to the way RTI works. This method of sending information between two systems would be of particular interest to bureaus who could have a large number of payroll clients. The integration will enable bureaus to reduce errors and minimize the time spent submitting their clients' files to the pension provider each pay period. At the moment, BrightPay has integration with Nest, Aviva and Smart Pension. BrightPay have further APIs with Nest to validate groups and payment sources and to approve contribution payments from within the software. This integration further streamlines the setup and ongoing tasks involved when using Nest as your pension provider. Every 3 years, employers must put certain members of staff back into an auto-enrollment pension scheme, and this is called re-enrolment. Some of the larger companies have already gone through the re-enrolment process. The re-enrolment duties vary depending on whether you have staff to re-enroll. The first step is to choose your re-enrolment date, and this should be done as soon as possible. Your re-enrolment date is chosen by you with a 6-month window to choose from. Therefore, you may decide to align your re-enrolment date with your other business processes, such as the start of your financial year or to avoid seasonal peaks. This window falls 3 months either side of the 3rd anniversary of your staging date. Regardless of whether or not you use postponement at your staging date, re-enrolment occurs 3 years after your staging date, not your deferral date. The chosen re-enrolment date will apply to all staff. You can't use different dates for different staff members or groups of staff. And also be aware that postponement cannot be used for re-enrolment. Once you reach your re-enrolment date, you will need to assess certain staff to work out if you need to put them back into your pension scheme. You only need to assess staff who have previously opted out or voluntarily ceased active membership of a qualifying scheme. You must determine whether these employees meet the criteria to be automatically re-enrolled. So you must re-enroll anyone who left your auto-enrollment pension scheme more than 12 months before your re-enrollment date, is aged between 22 and state pension age, and earns over the earnings threshold, currently £10,000 per annum. You also have the option to re-enroll various staff members, for example, directors, or those who are a partner in a limited liability partnership, those who have left the scheme within 12 months of your re-enrollment date, or those who have even given notice or given notice at the end of their employment. Having worked out which staff must be re-enrolled, you must now put them back into the pension scheme within 6 weeks of your re-enrolment date. It is your legal duty to write to each member of staff that you have put enrolled into your pension scheme. This must also be completed within 6 weeks after the re-enrolment date. You do not have to write to staff that are not being put back into your pension scheme. All employers must complete the re-declaration of compliance, even if you do not have staff to re-enroll into your pension scheme. This informs the pensions regulator that you have completed your automatic re-enrollment duties. Make sure that your chosen payroll software can handle the re-enrollment process. For employers or bureaus on their behalf, completing auto-enrollment duties can seem like a lot of work. It can especially seem daunting when there have been so many changes being implemented within the next year. Fortunately, it does not have to be as difficult as it seems. Some payroll software solutions allow employers to simplify and automate AE tasks. It is not a legal requirement to use software to process auto-enrollment. However, both HMRC and the pensions regulator recommend that employers utilize payroll software that supports the process of auto-enrollment. It is advisable that the payroll is also integrated with the chosen pension provider. Employers who use HMRC basic PY tools would probably be one of the most at-risk groups for auto-enrollment non-compliance, as the tool does not and will not properly support auto-enrollment. Assessing the workforce and calculating contributions manually will lead to an additional workload and a higher risk of auto-enrollment non-compliance. Some payroll software, such as BrightPay, allows employers to seamlessly process auto-enrollment with minimal workload and knowledge required. At BrightPay, we are compatible with 18 pension providers and have direct integration with Nest, Aviva, and Smart Pension, so that users can drastically reduce their workload when it comes to sending contribution files to the pension provider. We've recently added new functionality to cater for new employers and re-enrollment, and come the 6th of April 2018, the software will seamlessly handle the increases in minimum contributions to ensure that you are fully compliant with auto-enrollment legislation. So we're now going to just take a couple of minutes to show you how easy auto-enrollment can be with BrightPay. Today's demo was based on a new employer and how BrightPay can automate the entire process. So I'll now hand you over to Vicky, who is very good at giving these demos.
Many thanks, Paul. Good morning, everybody. So I just bring up the BrightPay software here for you. Okay. So the starting point is to first establish what your due to start date is. And if you are unsure, we have a number of workflows built into the BrightPay software to help you determine this date. You'll see here that I'm just in my payroll screen, and if I just click into an employee here, you'll see there's a series of flags and also a yellow alert. So if BrightPay detects that I don't have a staging date or a due to start date entered yet, I'm going to be prompted of this. And what I can do then is just click on the Enter Due to Start Date option here. And this is going to bring me through to various options that I can use to establish what my duties date is. So you'll see that you've got 3 statements on the screen. So firstly, I have been employing staff since before October 2017. Then my first staff member started or will start on or after the 1st of October 2017. And if you are exempt from auto-enrollment, perhaps a single director company, for example, you have the option to mark as exempt from auto-enrollment. So I'll just drill down into the first option here. So if you have staff that have been in your employment since before October 2017, if I click on this option here, I'm given a few more options. So what I can do is actually use BrightPay to connect me to the pensions regulator's website to retrieve my due to start date from there. And what that does, it uses your POAE reference number that you have entered in BrightPay to establish what that date is. Alternatively, if you know what your due to start date is, you can enter it manually by using the second option here. Or if you would like BrightPay to help you establish what the date is, then you can choose this third option. So I don't know my due to start date, but my first staff member has started on or after the 2nd of April. So if I choose this option here, I can then select, then there's 2 more options. So if your staff member has started between the 2nd of April and 30th of June, if I select this, then it will tell you that your due to start date is the 1st of January. If I go back and choose the second option to say that your staff member has started between July and September, it will prompt you that your start date is the 1st of February there. Okay. So there's a few workflows built in for you. I'm just going to go back to the first screen here because in my demo company today, all my employees have a start date of the 2nd of October. So I'll be choosing this second option here. And BrightPay now tells me, as Paul has just explained in his presentation, that your due to start date is when your first member of staff starts. So I'm going to accept that. I'm going to save changes at the bottom. And then I'm given the box then just to fill in when my first member of staff has started with me or will start. So I'm going to type in the 2nd of October here. Save the change. Okay. And when I pop back into my payroll now, you'll see then that my 2nd of October, this is falling in week ending the 7th of October here, so my duties are kicking in this pay period here. Before I do anything further, my next step then is just to enter details of the pension provider that I've signed up with, and you do this within the pensions utility and by clicking on Add New Scheme. So as Paul has mentioned, we are currently compatible with 18 pension providers, and by that basically means that we can produce all the necessary pension files in the right format for you for those 18 providers that you can see on the screen. As Paul mentioned, there's also API options for a few of them, and I'll show you one of those in the demo there. So I'm just going to use Nest as an example. So I'm going to choose Nest from my listing. Just fill in all the information that we ask you for. With these screens, it tends just to be all the information that you will obtain from your pension provider. So Nest, need an employer reference, for example. Then you just need to pop into the next section where you enter details of the groups that you've set up with Nest in this example here. So for example, if you set up a group with Nest called Weekly, your weekly paid staff, you enter the group name to match exactly. On this screen as well, you just need to tell BrightPay the contribution type in operation. So, for example, if you're using the phased minimum contribution rates that Paul has just covered, then you'll choose this option here. That's our default setting. Alternatively, you could have decided to go straight to the 2019 minimum contribution rate, so the option is there for that too. You could have decided to use customized contribution rates, so you're not wanting to use the phased minimum, but you want to enter the rates, I suppose different rates to the phased minimum there, and this allows you to come in here and tweak them as you need them to be, for example. Okay. Or if you want to operate a fixed amount, so rather than use the percentages as for the pension contributions, you want to enter a fixed amount each pay period, you can choose that option also there. Okay, so I'm just going to use it as the phased minimum for today. You're also then just required to let BrightPay know what your earnings basis is. So you have 2 options here. The default is to use the standard qualifying earnings basis, which has these lower and upper limits in place. So the employer is only going to make a contribution on any amounts falling between these. Alternatively, if you've decided to not use standard qualifying earnings, then you can use the custom rates here. For example, you may be wanting to take the pension contribution on the full salary, so the full earnings. So you may choose to remove the limits, for example, here. So again, I'm just going to just leave the default in operation. If you're with a pension provider that requires you to have different groups or categories for different sets of employees, for example, with Nest, if you've got employees who are paid weekly and also monthly, you would need a separate group for the monthly staff. Then you can just continue on adding all the groups that you need in, and again, just choosing the correct settings for that second group, etc. So I'm going to save my changes here. Okay, and that's my pension scheme set up. I'm going to return to the payroll now. So you'll see now that with my due to start date being the 2nd of October, I'm in that pay period in which the 2nd of October is falling, so I'm now being notified by BrightPay that I have automatic enrolment duties to perform. You'll see a series of flags and the yellow alerts, okay? And those yellow alerts will bring you through to the various options available based on the worker category that each employee is being assessed on. BrightPay will do the assessment for you automatically, so you don't need to worry about working out what worker category each employee falls into, as long as you've got the correct date of birth in and earnings there. So you'll see my first employee is being assessed as an eligible job holder. So if I click on View Options, I have 3 options based on this worker category. So I can go ahead and enroll the employee, I can postpone her, or I could mark as exempt if that were applicable to this employee. So I'm going to enroll her. So I'm going to click on the Enroll button. Okay, my enrolment date is entered for me. I'm going to click on Scheme and choose my weekly nest group from the listing, and then just choose the applicable tax relief in operation. So nest just operate relief at source there, so that is the default setting. I can just enroll this one individual, or to speed things up, if I have a number of eligible job holders that are all to go into this same scheme with the same tax relief applied, then I can use the option to enroll multiple employees with the same settings. And you can see here that there's 5 employees here that are eligible job holders. I'm going to select all, click on the Enroll button at the bottom, and those 5 employees are now enrolled into that nest scheme for me. BrightPay will then automatically produce the communications that each employer must give to their employees. So those 5 employees now require an enrolment letter. So BrightPay will automatically create that for you. All I need to do is just click on Letter here to generate it. And I can either print it, I can export it to PDF, or I can email it directly from the BrightPay software if you have an email address entered for the employees in question. I'll just generate a print preview to screen there for you. So the template is all built in for you, and these follow the pensions regulators templates there, and we just populate then the date and the employee's name and address, etc. for you. Okay. Once the employee is in receipt of their enrolment letter, you can then just record that as being done in BrightPay. And again, I can just mark that letter as done for just an individual or for multiple employees, just to speed things up again for you, and press continue. So if I return to my payroll screen now, you can now see that those 5 employees, their flags have disappeared, so I've dealt with their duties at the moment. My next employee is being assessed as a non-eligible job holder. So again, if I click on View Options here, 4 options available for this worker category. Your obligation is to write to them, telling them that they do have a right to opt into the pension scheme, should they choose to do so. And again, BrightPay will do this letter for you. And again, once the employee has received the letter, you can mark it as done. Okay. Again, you can postpone non-eligible job holders, you can mark as exempt, and after receiving the letter, should they decide to opt into the scheme, you do have the opt-in button here to actually pop them into the scheme as and when. My next employee is being assessed as an entitled worker, so the options are very, very similar here when compared to a non-eligible job holder. You've got the 4 options again. And again, you do have the obligation to write to them to tell them that they can join a pension scheme if they would like to. And again, the letter is here for you. If you wanted to postpone an employee, you can do so by using the Postpone button. You can postpone for up to 3 months. So say I want to postpone my remaining staff members up until the 1st of January. I can enter my deferral date, and again I can do multiple postponement here, so I'm going to postpone those 3 employees there, postpone them. You're then obliged to give them a postponement letter to let them know when they've been postponed to, and again BrightPay will do that letter for you, and again I'm just going to mark that as done for the 3 employees. Okay, and they will be reassessed then come the 1st of January when you reach that pay period in BrightPay. So you'll now see that on my payroll here, all my flags have disappeared, so I've dealt with every employee accordingly. If I just choose an employee for whom I've enrolled them into Nest, you'll now see their pension contributions being applied to their pay slip. It's also useful just to know here that obviously I use the percentage basis in my settings, but you can override this if you wanted to change it to a fixed amount. You can do so accordingly, or as in, if an employee wants to make a one-off contribution in any pay period, you can add those fields in as well there. Okay, so I'm just going to finalize my pay period here. Okay, you'll now see the number 2 has appeared next to my pensions utility, and that's to now inform me that I have 2 pension files outstanding to Nest, and I need to go and submit those now. If I pop into the pensions utility here, then with Nest they require an enrolment submission, and they also require a contribution submission every pay period thereon. The enrolment submission is done via the enrolment summary menu item here, and all I'm going to do is click on Send Enrolment Submission here at the top right. I'm just going to ignore this message because I'm in a test environment, but what BrightPay will do is it will access your Nest account for you to make sure everything is matching as it should. Okay. Step 1, select your employees. Step 2, just fill in any additional information that we're asking for. Okay. And at step 3, you're clicking on Send Now. So this is an example of an API. So it's literally going from BrightPay straight into your Nest portal for you. So very similar to an RTI submission, that it's going to go directly from BrightPay into Nest. Once received, you'll get the confirmation up at the top right of your screen to let you know that Nest has successfully received that submission. Okay. Likewise then, your contributions submission that you need to do every pay period going forward, now that you have reached your due to start date. This follows a very similar submission process. So literally click on Send Submission. I'm just going to ignore that again. Fill in any extra information it's asking you for. Click on Next. Select your employees. Select any reason for any partial or non-payment of contribution. So for example, if somebody's left that week, you can let Nest know here, for example. And at step 4, again, just Send Now, and that will send all your pension contribution information off to Nest for you there. Okay, so that completes the AE process for that pay period. Going forward, BrightPay will continue to monitor your staff for you. So for example, in the next pay period there, should an employee's pay increase and it moves them into another worker category, BrightPay will kick in with that prompt for you. So you have nothing to worry about. It's all automated for you there. And you'll see then that I've got duties to perform then for that employee. Obviously, Paul just mentioned that re-enrolment, and this demo today is based on a new employer, so it would be a long while off. But if I just pop back into the pensions utility here and into the automatic enrolment section, you'll see here that based on your due to start date, we will input your re-enrolment date for you based on 3 years from that date. As Paul mentioned, you do have a 3-month window either side of that, so at your discretion you can change that re-enrolment to suit your needs. But we put it in just so it's there, so that the chances of you missing a re-enrolment date don't occur really if you're still using BrightPay in 3 years' time. So yeah, so it's all there for you. Okay, so pass you back to Paul.
Yeah, thank you for that, Vicky. I think just one of the things that struck me when Vicky was giving the demonstration there, it probably may come across a bit overwhelming. Maybe there's so many things that you need to sort of do at staging. We've tried to make it as simple as possible. All these things are actually required. After staging, the number of things that you would need to do obviously goes down considerably. However, there is the duty to continuously assess your employees each pay period, those that haven't been enrolled. There's the duty to make the payment and deductions and to transmit the file to the pension company. that is an ongoing process, and it does speed up considerably from what maybe Vicky might have showed you there. It is quite straightforward, and you would get used to it. It's probably one of the bugbears I would have when I think about the likes of HMRC, Basic PI tools, or other software that doesn't handle these things automatically. It kind of leaves an awful lot of responsibility on the user to be aware if somebody has reached, say, the age of 22, or if they've gone over the £192 per week. Whereas when you're using BrightPay, it doesn't leave to chance. So thank you, Vicky, for giving that demonstration. I'm just going to pass you back to Rachel now, who has the unenviable task of handling all the technology here, because we're now going off-site, as far as I'm aware, and hopefully the technology will work on this occasion.
Okay, so just to finish off our part of today's presentation, we're just going to show you a quick video of BrightPay Connect. And BrightPay Connect is our new add-on software which allows you to connect your payroll information to the cloud, and you can invite your clients and your clients' employees to the software. So just bear with us now for a few seconds while we start the video. Okay, so that was just a very quick overview of BrightPay Connect. Just to let everyone know as well, we do run online demos of both the payroll software and the BrightPay Connect. So feel free to let us know if you wish to attend these. Both of them last approximately 20 minutes. So just before I pass you over to Henry today, I'd just like to say that BrightPay's Bureau license includes unlimited employers, unlimited employees, auto-enrolment functionality, and free phone and email support for $229 plus VAT per tax year. This license also includes CIS, payrolling of benefits, batch sending RTI submissions, and a payroll journal export to accounting packages. So I'm now going to pass you over to Henry, so just bear with us now for 2 seconds.
Well, thanks very much indeed, Rachel. I hope you can hear me.
Yeah, we can hear you perfectly now.
That's super. I'm Henry Tapper, and I'm really pleased to be working with you today. We've had an awful lot of BrightPay customers use Pension PlayPen over the last 3 years. I think we've had just over 700 users who've had BrightPay software out of a total of 7,500 people who've used Pension PlayPen. And I can say that not one complaint has been reached the Pension PlayPen about BrightPay software, which is quite unusual for us. So very well done to you.
Thanks, Henry. That's great to hear. Just to let you know, your slides aren't in full screen if you want to put them into full screen mode there.
I'm going to do just that now. Thank you. Sorry for the delay, ladies and gentlemen.
Apologies, and it's just wonderful.
I love it when technology goes wrong. Now, I'm afraid we're going to have to work from what we have.
That's no worry.
And I will do my very best to make it exciting despite these being in slideshow. Pension PlayPen was set up by me and a group of enthusiasts in the pension world back in 2012 because we saw auto-enrolment coming, and we saw it as being a big problem, not just for the pension industry, but more particularly for the payroll industry. We are a virtual IFA. What I mean by that is that we're online and we provide independent advice on which pension scheme to use if you are a small employer. As I said, we've had something like 7,000 employers who've actually used our full service. In total, we've had just over 21,000 employers who've used our wider service, which includes the use of our free auto-enrolment assessment tool. What our service does is allow you to choose a pension scheme which is right for your staff and you as an employer in a matter of minutes. We take full PI responsibility for the due diligence behind this, and we are acknowledged as the market leader in this area. The free-level services I'll come on to, but the actual Choose a Pension service which we offer is available on the market for £199 plus VAT, and as I say, it works very well with BrightPay. In case any of you think that auto-enrolment is a done deal, well, it's not. I'm sure those accountants out there who have new employers from October 2017 will be looking forward to the immediate duties which employers have with some trepidation. It's all a little bit quicker than what's happened over the last 4 years. Hopefully most of you by now are up to speed, but if you're not, you've got the daunting prospect of up to 200,000 new employers per year, which are expected to stage from March 2018, and those are the pension regulators' figures. We've recognised that there is a risk of offering a workplace pension. There's a compliance risk, which Paul has already spoken about. The workplace pension scheme must qualify. All those pension schemes you saw on the BrightPay screen are qualifying workplace pensions, but there are some masquerading out there which don't qualify, and there are some old legacy schemes out there which are simply not fit for purpose and can't be used. To check whether you have a qualifying workplace pension, if you have one already, it's pretty simple. Just phone up your provider and say, do you offer this as a qualifying workplace pension? And they'll either say yes or no. If the answer is yes, you may well want to use it. If the answer is no, and you've got an existing pension plan which doesn't qualify, you're going to have to get a new one. The second thing to say is that pension contributions are recognised as a form of deferred pay. They're not just some money that goes into the ether and is never seen again. The 2%, the 4%, the 8% of band earnings, which are the minimum contributions we've been talking about, are very real money, which are going to produce very real lump sums for people at retirement from which they can buy pensions. And as these amounts grow, so they become more important to employees. We have this saying that when your pension is as valuable as your car, it becomes a problem. When it starts becoming as valuable as your house, it becomes an asset. It's effectively your staff's wealth. And as employees see their pension schemes grow or their pension pots grow, then they become more and more attached to them and more concerned about them. I have been saving all my life and I have accumulated a pension pot which is worth more than my house. And I can assure you it is very, very valuable to me, and I pay an awful lot of attention to it. And I hassle my employer a lot to make sure that I've got the best terms on it. So if you think that the workplace pension is just something that you can forget about, I can assure you it isn't. It's worth getting the workplace pension decision right first time. And we have had cases in the UK recently and further back where there has been a duty of care put upon the employer to A, provide information about the pension scheme, and B, there's an obligation of good faith on the employer to make sure that the pension scheme is appropriate for staff. So don't think that pension schemes aren't without risk. Although some of these obligations have yet to be tested with workplace benefits since auto-enrolment began, we think that there is very real reputational, commercial and regulatory risk in workplace pensions. I've talked about risk mitigation. The simple thing to do when you are choosing a workplace pension is to avoid any potential negligence claims by doing due diligence. But I think it's more than that. Yeah? You're going to be putting between a minimum of 2%, well, you won't, which is what all you can do between now and April. That goes up to 5% and ultimately 8% of band earnings as minimums into your employees' pensions. wouldn't you want, as an employer, to be getting a return on that investment, maximising the perceived employee benefit, minimising the cost to you as an employer, and increasing your employees' engagement in what is a very important issue, which is when they can actually stop working for you and start enjoying retirement. And finally, and this is an important point for those of you who are actually employers out there and have your own workplace pension, there's a little bit of enlightened self-interest here. If you can improve the return on your pension by 1% per annum, that's equivalent to a 27% increase on your pension in retirement. So give yourself a 27% pay rise by getting the governance of your pension scheme right. Okay, so which scheme? Now I've put up a random selection of pension schemes which we have known and loved over the last 5 years. Some of these schemes are no longer in existence. Friendly pensions did not go bust, but it had to be bailed out by smart pensions 2 years ago. So there are situations where pension schemes have already fallen by the wayside. The Prudential, who we thought were going to be one of the big players in this, decided to withdraw from workplace pensions altogether in 2008, and Scottish Life are no longer on that list because they've changed names to become Royal Life. So, sorry, not Royal Life, Royal London. So you can see quite a lot of change in the pension landscape even over the period of which auto-enrolment has been going. Now I mentioned that the pension PlayPen itself has a process. It's a very well worked process. As I say, we've had 21,000 odd clients who've used it. And the first stage of that process is to actually work out what your liability is commercially in terms of your pounds, shillings and pence, in terms of putting money into this scheme. We allow you to do this before you go to your pension software. By simply downloading a spreadsheet of employer information, a CSV file, we can tell you who you will have to enroll, what your minimum employer contributions are, and allow you to model those contributions on various scales as outlined in Vicky's excellent presentation, and we can also show you the impact on employees of their contributions. That provides you with a report which is absolutely free to use and which allows you to really work out to what extent you can go beyond the minimum. The second stage in our very simple process is what we call choosing a pension. And it's as simple as this. You give us some details about yourself, including who your payroll is with, and we will tell you which of the pensions out there from that long list that you saw earlier and from the list of pensions on the BrightPay list are right for you. Now, some of those schemes may not be right for you. If you have got lots of low-earning employers, you will probably want a scheme which doesn't use a net pay contribution method, because there's a real possibility that you may not be able to get tax relief for your low-earning employees. If, on the other hand, you've got high-earning employees, you may well want to use a net pay rather than a relief at source scheme. We'll tell you which are which and recommend which of them are best for you. The charging structures of these pension schemes are different from one to another. Some favour certain types of employees, some favour others. And from an investment perspective, some of these schemes are particularly suitable for employees who have a high amount of investment sophistication, and some are there for very basic type of employees who've got no investment sophistication at all. I am one of the latter group. I am not a sophisticated investor. I use what's called a default fund. I want a suitable default fund for me, and I use a pension arrangement which meets my limited needs. Even pension experts are not necessarily experts in investments. But you may well want to use a more advanced type scheme like a self-invested personal pension, and obviously the information we take from you will help us to analyse your company's situation and give you the right answer. So what we're giving you is instant quotes, how much this pension scheme is going to cost you as an employer, how much it's going to cost your staff based on your particular demographic. We're going to rate each of those quotes out of 100 and list them in a league table. We're going to give you detailed fact sheets which you can pass on to your staff, which will help them to understand the choice that you made. The results will be tailored to your particular employer's needs. And once we've got you the answers, we are going to give you a series of PDFs which form an audit trail, which allow you to share the results in downloaded reports. Now you may have noticed at the first slide that Pension PlayPen works in cooperation with the Pensions Counter, which is an IFA. We as an organisation, the Pension PlayPen, are an online hands-off organisation. You never see us. But if you want hands-on help in scheme implementation, if you have to do corrective work, if you need to configure your payroll, and you shouldn't have to do that with BrightPay because their system is so easy to use. If you want liaison with the pension regulator, we know them as the TPR in the trade. If you want help engaging your employees, telling them what's going on face-to-face or on the telephone or via web chat, and if you want training and support on an ongoing basis, for instance, if you lose an administrator in your organisation and want a new one trained up, we can help you with all of those things. That's not included in the 199 service. The cost of this extra service is bespoke to what you want, but we're happy to give you a quote, and I'll show you how later on. Great. Now, any service which involves the take-on of an ongoing obligation to provide pensions over time is going to require some form of governance. And the government's chosen way of explaining whether or not your pension is doing well or badly is using a phrase called value for money. And the chairman of trustees of the master trusts that operate workplace pensions and the independent governance committees that operate group personal pensions, the other type of workplace pensions there are out there, are required once a year to give value for money statements. The trouble is they don't really know how to do it, and frankly all of them are going to be doing it probably in a very dissimilar way. What we are generating at Pension PlayPen going forward, and this will be available from April 2018, is an ongoing governance service which will tell you, as an employer, what the performance of your pension has been over the time that you've been in it and since the point at which that pension scheme originally started out. Nest started out in 2010, so it's been going now nearly 7 years. We'll give you an idea of how volatile the returns on your pension have been. Generally speaking, it's not a good idea to have lots of volatility in a pension return. That means it shouldn't go up and down. It should stay in a nice smooth line so that everybody feels comfortable. And we'll also tell you what your pension scheme is actually costing you. Now, as you're probably aware, what you've been disclosed as the cost of these workplace pensions in the past is one thing. What's going to be disclosed going forward includes what are called the hidden costs of pensions. And as in all these things, the hidden costs are unknown until they are disclosed. And we are working at the Pension PlayPen very closely with the Department of Work and Pensions and with the Treasury through the pension regulator and the FCA to get to the bottom of what you're really paying. so that you get value for money scores based on real-time information on performance and risk and on costs. And the Pension PlayPen is the only organisation that is actually committed to doing this independently of the providers, because we are a genuinely independent financial advisor, albeit a virtual one. Okay, so all this leads to a call for action. No point in coming and talking to you this morning unless we can actually help you. And how can we do that? Well, we can provide you with a full solution for choosing your appropriate pension scheme, and we can proactively prepare you as accountants and indeed you as employers, or both, yeah, for only £199 per employer. That's £199 plus VAT. If you want more information on how this service works, including a full demo, all you need to do is press on the link which will be coming through to you digitally, or type into your browser pensionplaypen.com, or you can call me on 07785 37768, and I do pick up my mobile phone or call you back. So it doesn't matter if there are 100 of you who call me up this morning or tomorrow or whatever, you will get a face-to-face, I'm sorry, not a face-to-face, telephone conversation with me, helping you to sort your pension. If, on the other hand, you're worried about some of the things you've been hearing about auto-enrolment, you want some hand-holding with a regulator, or you have some problems with your existing pension scheme and you need to actually have some help on a bespoke basis, then speak to my colleague Daniel Harvey on 07291 158 318, and Daniel will help you with those operational issues. We do hope to speak to some of you. Although we're a digital organisation, we're very committed, if you've taken the trouble to come on a webinar like this and listen to us, to taking the trouble to help you on a one-on-one basis. So thank you very much for your time. I think I've used up my allotted slot, and I will now hand you back to Rachel for the conclusion and the questions and answers.
Okay, thanks for that, Henry. I'm now just going to pass you over to Vicky again and Paul for the questions and answers.
Many thanks, Rachel. If you do have any questions for Henry there, if you want to just type them in there, and we'll ask Henry there as they come in. So just while questions are coming in there, well, I suppose we'll just start with some of the earlier questions that came in, which are probably related to Paul's presentation. I'll start just at the top, I guess. What do you do with employees that have left the company with regards to re-enrolment?
Well, there's no responsibility of the employer in relation to employees who have left in relation to auto-enrolment. So I hope that answers that question.
Please clarify that an employer from the 1st of October will determine if the employee needs to be enrolled after the first payroll run, but will only make contributions on the next pay period.
Okay, you help me with this one.
Yeah,
Vicky.
no, so I suppose it will be the employees, the first employee that starts with you after the 1st of October, their start date will determine then what pay period they get assessed in.
Yeah, it's very much the same as the way the staging date worked before. So as in Vicky's demonstration, we had somebody starting on the 2nd of October, and she was doing a weekly payroll there, which ended on the 7th of October, I think it was. Yeah. So it was that first pay period that we actually had the responsibilities. Now you can actually postpone, you can still postpone for up to 3 months. And okay, just one thing I'll just say about postponement, very important, you get the communication out within the 6 weeks of the duty start date. But that is an option that you have in order to be able to sort of put time aside to choose the pension scheme and probably use Henry's services there in doing so.
I suppose it's just worth pointing out there as well, sometimes based on the employee's enrolment date, it can be what's known as a partial pay period. So even though the employee has been enrolled in a pay period, it could be that there's no contributions actually due because it's kind of a short, it's not a full week that's being seen. So sometimes it can happen that the full contribution is made in the next pay period.
Yeah. And that sometimes comes down to down to scheme rules.
Yeah.
I know Nest have no issues with zero contributions.
Okay. Will BrightPay automatically integrate with the People's Pension like it does with Nest and Smart Pension?
Well, we are talking to the People's Pension at the moment, but I have no time frame on when that will be available.
If a company only consists of a director, i.e. there are no employees, can that director be enrolled into an auto-enrolment pension scheme voluntarily, although they would be exempt from auto-enrolment?
Okay, I actually don't know the answer to that one. Henry, what have you got? Can you answer that?
Sorry, could you ask the question again? I wasn't concentrating.
Okay, so if a company only consists of one director, so there's no employees at all, can that director be enrolled into an automatic enrolment pension scheme voluntarily, although they are actually exempt from auto-enrolment?
Yes, they can, and they can enroll themselves effectively as what used to be called entitled. They aren't required to have a contribution paid on their behalf, but obviously they have a controlling interest in the company. They can decide to have a proportion of their salary paid in, either directly or they can choose to make the contribution against that salary themselves. Most times we see this working on a salary sacrifice basis where the employer just pays directly into their scheme.
Okay, thanks Henry for that. I'm going to just stick with a director question as well. In respect of director-only companies who are registering a payroll after October 2017, is there still a compulsion to let the TPR know that they are director-only companies and have no duties under AE?
Well, I know in BrightPay we allow the facility for the employer to communicate that with the pensions regulator that they are effectively exempt. I'm not sure the wording is effectively exempt, but they do not have auto-enrollment duties because of that. So yeah.
The other thing is they have to sign a declaration of compliance at the other end, which does actually confirm that they are exempt. And on that declaration of compliance, they are effectively telling the regulator what their situation is.
Okay, thank you.
Thanks, Henry. Do staff already in a pension scheme and are contributing to a pension have the option to opt out if they wish at re-enrolment?
Yes.
Okay, thanks, Paul.
But they have to be re-enrolled first. I think that's the main emphasis there. Okay. They can't opt out before they're re-enrolled. They have to be re-enrolled and then
opt out. Yeah. And you've just covered it actually, Paul, but just no harm asking it again. Is postponement still available after the 1st of October?
Yes, it is. And as I said, I'll just keep harping on with this one. You need to get the communication out within 6 weeks of the duty start date for the postponement to be valid. Otherwise, you could end up needing to backdate auto-enrollment duties back to the duty start date.
Okay, and just to follow on there, can you continually postpone an employee if they do not meet the earnings trigger, i.e. back-to-back postponement?
Yeah.
You can, yeah, there are rules. So if you postpone for, say, the first period, if at the reassessor, the deferral date when they are assessed again, if they're not eligible at that point,
you can still...
Yes, so the next time they become eligible, say a couple of pay periods on, for example, you can postpone again. So as long as you don't have back-to-back eligible job holder assessment, then yes, that is fine. Henry, I'll ask you a couple of questions there. Okay, is the PlayPen, can you just clarify the cost? So you've mentioned £199 plus VAT. Is that monthly, annual?
No, that's a one-off fee.
Okay.
And I'll give you an assurance, but once you've paid that money, you will not be hassled by us going forward. We have a guarantee that we will not use your information for marketing, either internally or externally. It's pay and forget, although you are very welcome to come back for more information, and you can do so using our governance service, which we aim to be free going forward as an extra incentive.
Okay, and is the pension PlayPen, is it aimed at individual employers or agents primarily?
I think the statistic is approximately 2/3 of our businesses come from agents, primarily from accountancy bureaus, some from IFAs as well, although recently it's pretty well all been bureau, and the rest has come directly from employers who've chosen to use our service, either under the direction of bureau or as independent of their bureau. So they basically say, we'll do the choosing and we'll tell you who we've used. We do have quite a clever little tool on the site which allows agents to pass on to the employer the responsibility for making the choice, because one thing we won't allow is an agent to actually choose the workplace pension on behalf of the employer. The rules do say it's the employer who has to choose the workplace pension, but we don't want accountants or payroll bureau being seen to be actually delivering the decision on behalf of the employer. Not only do we not think that's legal, we also think it's potentially extremely dangerous with regard to the PI policies of the agents.
Thanks, Henry. And can also as well, Henry, can you clarify the net pay comment, as low earners are actually better off with relief at source?
Okay, I'm going to get to be a little bit technical here. The auto-enrolment threshold, as Paul said, is £10,000. We know that the minimum threshold for paying income tax is higher than that and will be increasingly higher than that. Those employees who are enrolled because they've breached the £10,000 threshold in any one pay period, that could be weekly, monthly or annually on a pro rata basis, could find themselves actually not getting tax relief, because under net pay arrangements you only get tax relief if you pay tax. Under the relief at source arrangements, which most workplace pensions now use, including Nest and People's Pension, and all of the group personal pensions such as Norwich, Aviva's, Legal & General's, Royal London's and so on, those arrangements you get tax relief in the form of a government incentive even if you don't pay tax. And this is critically important because we can see situations down the line where people who are consistently paying contributions at the moment at 1 and future at 3 and 5% will start coming back and saying, oi, where's our tax relief? And if they're in a net pay scheme, the employer will have to say, you don't pay tax, you don't get tax relief. But they can turn around and use a class action lawyer or whatever and say, but if you put us in the right kind of pension scheme, e.g. one with relief at source, we would not have had that problem. We would have got the government incentive in the form of the extra tax relief, whether we pay tax relief or whether we pay tax or not. You, the employer, have not been using your duty of care towards us, and that's where you as an employer might well find yourself in trouble, and indeed you as an accountant, if you've been recommending schemes which are working on a net pay basis and they haven't been giving the tax relief, may also find yourself in trouble. So it's worth doing due diligence on what type of pension scheme you're putting your staff into.
Many thanks, Henry, for that. I'm just going to jump in here just because it's related to tax relief again, but just with regards to BrightPay. So why is the tax basis for the pension not part of the pension setup in BrightPay? Because what BrightPay requires you to do is do it when you enroll each employee. And again, I think that comes down to, like, you set up the pension scheme just once. You're only required to set it up once, and that's for use across all employees then. I suppose some employees have different tax reliefs, so, for example, I use Nest as an example. If there isn't, if an employee doesn't have a national insurance number entered, they require there to be no tax relief applied. So it's for that reason that we have to do it at the enrolment stage, just to kind of cater for individual differences.
We do default it to the...
We do,
yeah.
But at the setting up of the pension scheme, we don't have that setting there.
Okay.
So it's just kind of on an individual.
And I know listening to Henry there, it brought up net pay arrangement. I can't understand why that terminology was ever used, because it obviously relates to a deduction from gross. So why didn't they use gross pay arrangement, for goodness sake?
There's a long and complicated answer to that question, which I won't go into now.
Sorry, Henry, just another couple of questions just on your pricing again, just to clarify again. So does it mean that an agent, say, with 20 clients should pay 199 plus VAT 20 times? So is it per client?
If an agent has got 20 clients to put through and they want to give me a ring, then I'll have a conversation with them about bulk terms.
Okay, thanks very much. I've come across branded and unbranded earnings.
I think what they might mean there is banded.
Oh, banded, sorry. I've come across banded and unbanded earnings. Could you explain the difference?
Okay, Henry, can you take that one?
Yep, okay. As it stands at the moment, and this may change because this is actually under review, but as it stands at the moment, the earnings between £0 and 5,000, and I've got the figure in my head somewhere, but it's just sitting in the wrong bit of my brain. I think it's about £5,500, is exempt from contributions and earnings above the national insurance threshold, upper threshold, £41,000 or something. That is also above exempt. So the only part of somebody's earnings that you have to pension are in the band between this minimum amount and the national insurance threshold at the other end. So that's what's known as the band. Of course, you don't have to pay against the band. You can pay from what's called pound zero, ignoring the lower end, which is a lot simpler, but a little bit more expensive. And of course, you could pay against total earnings on the upside. So if somebody's earning £70,000, £80,000, you can pay against the total amount. That's at your discretion. The only requirement on you is to pay against the band.
Thank you, Henry, for that. Just a general AE question. So what happens with new employers who haven't had the foresight to already have a scheme set up? Paul, want to take that?
Well, I suppose they do.
Okay.
No problem, Henry, go ahead.
But, most haven't. In fact, we find that only about 1 in 10 of those employers who come to us have already set up a workplace pension, and the other 9 haven't, and it's now up to them to enter into it for the first time. And we've had nearly 1 million employers now who've gone through auto-enrolment, and I believe that about 85% of those employers hadn't had workplace pensions at all. So there's a lot of new participating employers in these big master trusts and GPPs. Sorry, Paul, I was jumping across you there.
No problem there. I suppose the other thing is it's fair to say that the actual process of setting up with a pension scheme is usually a fairly short process. It can be done maybe within half an hour. The main thing is actually choosing the pension scheme and the due diligence around that, which is, probably something that employers should consider postponement in order to get that bit right.
Okay, thanks, Paul.
Theoretically, you're supposed to have your workplace pension set up at the point of what we used to call staging, but now this is day one.
Yeah, absolutely.
In practice,
employees
Paul says, a lot of people leave it till the back end of postponement to get the pension in place. That's technically not correct and a breach, although it's more honoured in the breach than observance.
And I suppose technically as well, employees have the right to opt in during that postponement period. So, it's I can't see many employees doing that, but they can.
Yeah, they can do it just to catch their employers out.
Another general question, if a company only has employees under 22, or I guess no employees to enrol, if we kind of expanded a little bit there, do employers still have to enrol with a pension provider?
They don't, but they should actually have maybe gone through the process of choosing which pension scheme they want to eventually go with for when that employee becomes over 22 or they have an employee with the earnings over that amount either.
Yeah, or even if they want to opt in, at any point. Okay, just a couple of extra questions for you there, Henry. How will PlayPen keep up to date, and is there a cap on how many clients you can put through PlayPen?
Well, the second one, thankfully, no cap, and we welcome as many as can come our way. As a digital service, we simply just pass everyone through the system, and we haven't as yet had a capacity issue. I very much doubt we will have. On the first point, I'm a director of First Actuarial, which sounds very posh, and it is. We're a pension consultancy of about 250 experts, and we analyse the market, and every 3 months we get updates, not just from the pension providers, but also from the payroll providers. So, for instance, with Smart, we know that they've got particularly strong links with Nest, Aviva, sorry, not Smart, BrightPay, have got particularly strong links with Nest and Aviva and Smart Pension, and they will have higher scores. If, for instance, people's pension were to come on, there was a question earlier, and have an API with BrightPay, we would increase their scores. So the scores for these pensions are dynamic, and they change as we review them, and sometimes we have to make a dramatic change in the scoring. For instance, we've recently had to downgrade Now pensions, who've had a lot of problems with their administration and actually had some censure from the pension regulator. We've had to downgrade their pension, and I'm afraid they've actually put their price up this very week, and we've had to put in place a process to actually change the pricing structure on Now pensions, which will have another retrograde sort of step in their marking. So I'm afraid at the moment Now are on a sort of the downhill slope, and others are on the uphill slope. And it's good to see organisations like Nest and Smart Pensions and so on who've been stepping up and done much better than we had originally expected. And one or two organisations who have perhaps become harder to use, like Legal and General, and some which have become quite expensive, like Standard Life, and some organisations like Aviva, who've really just been improving all round. So it is a very dynamic and fluid situation, but we're trying to create some consistency over time by doing these quarterly reviews of everyone, and of course we keep records of exactly why we've got the scores. So if anyone comes back to us at a later stage and say, why did you choose Aviva? Why did we choose Aviva at that particular point? We can give them the exact details and organise the reports which they originally downloaded, which they may have lost. So don't worry, if you use us, the due diligence stays with us, and we'll be effectively a repository for all the audit trails of decisions you and your clients have taken.
Thanks, Henry. And just somebody mentioning there that they've heard that some pension providers close the door to employees. They've left it too close to their staging date. Have you experienced this?
Yes, we get lots of this. A lot of employers do actually leave it not just to their staging date, but considerably after their staging dates. Some providers are particularly good at retrieval, and they will help out with the pension regulator and smooth things over. But obviously, there's only so much that can be done. And obviously, providers have got the right to say no if there is, if they see the employer's left it too late. We will always be able to find a home for an employer eventually. Even employers who haven't got UK bank accounts, who are some of the trickiest employers we have to deal with, we've got special concessionary facilities for them, provided they've got a very good reason why they can't use the UK bank route. The money laundering is a big problem for them.
Thanks, Henry, for that. Just a couple of BrightPay related questions then. So you mentioned earlier that at the moment BrightPay does not integrate with the People's Pension. Does this merely relate to an API solution, or are there reports that can be exported as CSV format files?
Yeah, sorry, Vicky, I should have been a bit clearer on that one. Yeah, at the moment BrightPay can actually export to CSV file the pension people's, or sorry, the people's pension format CSV file. It can do that, and it integrates in that manner at the moment. What I was talking about there was the actual API solution.
Yeah, and of the 18 providers, for those that we don't offer an API, they are all the others are CSV uploads. So it just makes it a two-step process rather than a one-step process. That's the only difference really there. Okay. How do you see what letters and notifications have been sent to employees?
Okay, well, I suppose this is one of the things on our wish list at the moment to make this a little bit more automated. I know for our own UK company, which we have here, we generally tend to export the PDFs and keep them on a file, sort of a digital file as such, or they're also available through our BrightPay Connect add-on that you know, the employer can log in there, can see what letters or communications or payslips or whatever have been sent to the employee. But yeah, no, we are planning hopefully to have a bit more automated reporting from within the software of these communications. But again, I don't actually have a time frame on that at the moment.
Okay. And have we any plans to provide a standard letter to employees that can be emailed direct with the payslips regarding the contribution increase due in April 2018 and 2019?
It's actually not one we've been looking at the moment. I suppose what we've heard on the grapevine is that the pension companies may be doing some of that themselves. But yeah, it certainly would be advisable for employers to let their employees know that this is happening, and that they just don't get the query coming to them on the 5th of April payslip, and why is this happening?
Exactly. And just a nice comment in there that BrightPay and People's Pension work really well together, no problems with reports at all. Yeah, definitely. And we must say as well, People's Pension support as well are very helpful too. So So just what are the costs of your software again? So the Bureau version of our software, which is for unlimited employers and unlimited employees within each employer file, is priced at $229 plus VAT, and that's a tax year price, so it's renewable then every tax year. The BrightPay Connect then is £49 per employer subscription, but then the staggered pricing, the more packs that you have from us.
Substantial discounting for bureaus.
Okay. Just another question, Henry, for you. I'm not sure if you want to take this one. Is it necessary for a client company to register for a pension scheme where the two directors in the company have opted out in another company scheme they are directors of, and the only other employee of the company is a non-eligible job holder?
I would say that that's one where I would refer it to the pensions regulator, because there may be something very specific there which I've missed. But my gut feeling is that actually it's what goes on with your company, the one that's being looked at, nothing to do with what's going on in other companies where the opt-outs may have occurred. So you can't opt out in general of auto-enrollment. You have to, if you're eligible for more than one company, you have to opt out each time that you're coming up for staging, or as it now is, as a day one type approach, and that's it. Yeah. So not very well explained. It was a very difficult question.
Yeah, it's very complicated. I mean, even in relation to duty start date and the actual commencement of employees, there's a whole section around, you know, that you have to look at the directors as well, and then you have to ignore some of that, and it is actually very complicated.
Okay, and we'll just finish off with one last question. I know, Paul, you covered it before, but just to clarify again the point made, so if there are no employees that need to be enrolled, that there is no requirement to have a scheme set up.
Yeah, well, that's what I hear, and it's basically, I know the pensions regulator, the last workshop I was at, that this was something that they were reinforcing, that, and I think they just want to avoid, I suppose, the huge capacity requirement for the pension companies if you had a lot of requests for pension scheme registrations where, you know, it wasn't going to be used, or it wasn't going to be used for some time into the future. But that is my understanding. There is no requirement for them to set up a scheme. There's no eligible or non-eligible job holders.
The more experienced out there may remember stakeholder pensions when we had loads and loads of companies setting up stakeholder pensions which never had anybody in them. These became very expensive for the insurance companies, and the regulator is mindful that this doesn't happen again. So unless you actually need a workplace pension, it's probably best not to set one up. Obviously, there's this issue about non-eligible or entitled workers who decide they want to be in the pension scheme, and if you've got no eligibles and you've got no scheme, you're going to have to set one up quite quickly. But my experience with the pension regulator is they've been extremely understanding in these circumstances and have given a little bit of latitude.
Great, thanks for that, Henry. So that's all the questions. We do have a couple of questions for demos of our various packages, so we will touch base with you individually on those and arrange a time for them. So yeah, thank you very much. I'll just pass it back to Paul.
And once again, Henry, congratulations on that award you received last week, was it? Or this week?
Yeah, I'm a total fraud. I don't run payroll. So thank you for the CIPP for giving me an award for my services to payroll. But I'm very, very grateful to have a recognition on the pension side because pensions needs all the confidence that it can get. So hopefully in this seminar we've been able to give you a little bit of confidence that you can either for your clients or as clients further their choice of pensions.
Okay.
I have just one last question just in at the very end, but yes, the cost for BrightPay is £229 per tax year for the bureau version, so if you're a payroll bureau, accountancy practice, etc. For a standard license, which is a one company license, it's £99 plus VAT, and again that's per tax year. So I hope that helps.
Okay, well listen, thank you very much, and thank you Henry once again for joining us today. Thank you Vicky for navigating through BrightPay, and Rachel for ensuring all our technical stuff kept smooth. So thank you again for joining us, and hopefully we'll see you again or hear from you again shortly.